Good evening friends. Welcome to Adda 24/7. We are in Cracker MCQ series BFM module C and D. It's basically related to risk, treasury and balance sheet. Okay. So let's start. Before moving ahead, I would suggest download Adda 24/7 app on your mobile. In this app, you will be getting premium study material, current affairs, job alerts, daily quizzes, and you call it, you have it. Almost everything is there. Here, what do we need for CAIIB? Mainly notes, classes, and test. So all of these are there. So download this immediately over here. You get live classes in this video section as well as the recorded videos also. Okay. Also, subscribe to Officers Adda YouTube channel. In this channel, you will be getting all the latest updates for CAIIB. Okay, this new batch has already started for ABM, BFM and retail. Join this ASAP. Okay, because December 2022 is your last attempt with the current portion. In May 23, you will be having the new portion altogether. Use this code Y432. I'll tell you how to use this code. Okay. Those of your friends are in JAIIB, tell them to get the JAIIB selection and other material at the lowest cost. Okay, use the code Y432. Let's start. Yeah. So I'd given you homework. Which of the following instruments do contain zero risk? Means I'd removed this not and told you to find those instruments which have zero risk. Okay. Investment in shares, bonds and debentures, term deposits and government bonds. So basically I've seen the answers mainly the differences between means all of you are getting confused between this B, C and D means bonds and debentures. Here bonds and debentures are never the zero risk instruments. Okay, so mainly I have seen the answers between C and D only because everyone thinks term deposits is a zero risk investment. It's not that. It depends on the nature of that bank and the stature, in fact the rating of that bank. If you invest somewhere in some risky bank, you will definitely face the problem, isn't it? So investing in term deposits is also not a zero risk, but yes, investment in government bonds, that's a zero risk because we consider the sovereign bonds given by the governments to be risk free, totally risk free. Okay, so the answer is D. Got it? Next one. Which of the following statements is not true? Now see here, we want not true. Okay, so which of them is not true over here? Let's see. Large variation in net cash flows happens in business with higher risk. So that's obvious. Okay, let me get the answer from your side first. Okay, large variations in net cash flows happens in business with higher risk. Number one, A. Capital requirement would be lesser in higher risk business. B. C. The profit potential would be lower in a business with lower risk. And D. Lower the variation in the net cash flow, lower the risk. Okay, so what do you think should be the answer? A, B, C or D? First you answer, write it in the comment section, then I'll answer. Yeah. Okay, large variation in net cash flow happens in the business with higher risk. Here large variation means there is the risk the fluctuations are huge, so it definitely means that the risk is higher. So this is correct, but we want not correct. Okay, so this is not the answer. Capital requirement would be lesser in higher risk business. Now this is a variation, means what? This is an anomaly, we can call it. For higher risk business, capital would be required higher. Why? Because cushion is required higher. Higher risk means higher risk, so you'll be requiring more cushion. Mainly tier 1 capital would be required as higher. So this can be the answer. B is the answer. Let's see C. The profit potential would be lower in the business with lower risk. So low risk, low return. So that's definitely also true, but we want false, right? So this is also out. Lower the variation in net cash flow, lower the risk. That's obvious. Means here, if I have every year I am getting the same amount of profit, or every month I am getting the same salary, it means the risk is lower, isn't it? So this is also true. We want untrue, so this is also false. So this is also not required. So the answer is B. Got it? What is risk adjusted return on investment? Okay, means we want ROI. Okay, ROI. I. Okay, some books call it is similar to that of RAROC also, RAROC, because investment is generally equal to the capital. Means what we make investment, we always invest as per our capital. Okay, but there is a variation. Exactly speaking, in theoretical terms, RAROI is different than RAROC. Okay, logically 90% we consider it as the same. Okay, but theoretically it's different. I am again telling you. Yeah. So what is the risk adjusted return on investment? It is a process where risk in business or investment is netted against the returns from it. Okay, so risk in business is netted against the returns from it. Okay, let me get the answer from you first. A is the answer. Higher the risk adjusted return on capital, higher is the reward to the investors. Okay, so this is a quality of RAROC. Higher the risk adjusted return on capital, higher is the reward for the investors. Okay, the investors would have more performance, such investments. Okay, so I would change this question a bit, because the question, if you ask me exactly what is the meaning of return on this risk adjusted return on investment, the answer is A, because it is a process where return on investment is netted against the returns from it. Risk in the business is netted against the returns from it. Okay, that is basically RAROI. If you get the question what is RAROI, then A is the answer. But look at these three options, A, B and C. Okay, I'll slightly change the question. What is the RAROI? So I'll make this new question and I'll just change this, that what are the qualities of what is RAROI? Qualities. Okay, or yeah, you can mention it qualities also, or peculiarities. Okay, anything you can call it. Now if I say peculiarities or qualities, now the answer is different. A is the answer. B, higher the RAROI, higher is the reward to the investors. That is also true. Means if I get higher returns, if my risk adjusted return on investment is higher, then it means the investors will get more amount, so they will be happier. So that is also true. Then the investors would have more performance for such investments. That is also true. Means if I am having higher returns, I'll definitely try to invest more and I'll have more performance in that. Okay, so C is also true. So the answer is all of this. But this is for what? What is RAROI? Qualities or peculiarities, or some points about this RAROI. Okay, so all these A, B, C points are true about RAROI. Okay, and if I ask you what is RAROI, specifically that, then A is the answer. It is a process where risk in the business or investment is netted against the returns from it. Okay, it's very simple. See this, ROI is taken like this, ROI, return on investment. Then what do I do? ROI minus risk factor. Now what can be the risk factor? This risk factor can be anything. Forex, means if my company is dealing in Forex, then there can be a country risk also. Country risk. So if my company is dealing in various countries, so even this risk needs to be considered. And then what I get is ROI. Okay, that is the meaning over here. A bank may face the following risk. So what risk can the bank face? Okay, let's see. Balance sheet risk, transaction risk, operating and liquidity risk, and all of this. Answer fast. What do you think should be the answer? A, B, C or D? In the comment section immediately. Okay, everyone please like the video, please everyone. Okay, and share it in your groups so that everyone else can also benefit. Okay, so what do you think is the answer? Yes, many of you are answering correctly. It is all of these. Balance sheet risk, bank will face it. Transaction risk, bank will face it. And operating and liquidity risk, that will also be faced by the bank. Okay, what is balance sheet risk? Balance sheet risk is maintaining the balance sheet. Maintaining the balance sheet means what? If my liabilities grow, my assets should also grow. If my assets grow, my liabilities should also grow. And my assets and liabilities should not grow in different proportions. Then I'll be in trouble. Okay. What is transaction risk? Transaction risk means if I do this here, this is different than the operation risk. Okay. Transaction risk means whenever I do a transaction in Forex or in some other country, then settlement of the transaction is known as a transaction risk. Operating risk, you already know. Operating means this, same as operations. There is also one more term called as operating it's not risk actually, it's operating separate point over there. Okay, that is similar to transaction. Okay, but operating risk here means operations risk. Okay, and liquidity risk the bank will always face, may always face. Liquidity means what? If my assets are lesser than the liabilities, okay, or there is a mismatch in the maturities of my assets and liabilities, then I'll definitely face the liquidity risk. Okay, so all of this is the answer. Okay, the factors contributing to balance sheet risk are, so what are the reasons because of which my balance sheet risk occurs? Okay, so let me get the answer from you. Mismatch between the currency, maturity and interest rate pattern, structure of assets and liabilities, and all of these. Now what is the answer? A, B, C or D? What do you think should be the answer? Type fast in the comment section. Everyone, yeah, type fast. A, B, C or D? Which one? Simple one, isn't it? It's D. Why D? See here, mismatch between the currency. Between the currency means what here? Balance sheet always has two parts only. One is asset, second is liabilities. Assets and here liabilities. Okay. If my liabilities is in rupees, okay, and my assets are in dollars, then I'll definitely face this risk of mismatch between the currency. Maturity and interest rate risk means if my assets are for let's say 3 years and my liabilities are for let's say 1 year, okay, then I'll definitely face the mismatch risk, maturity and interest rate risk, because after 1 year the liability person will come to me for withdrawal of that amount, but I don't have that amount because I have given it for loan for 3 years. Okay, and structure of assets and liabilities, similar pattern over here, means my gap should always be matching, means the maturities of my assets and liabilities should always be matching. So all of this is the answer. Correct? Got it everyone? Now one for homework. The balance sheet risk may result in, means the balance sheet risk of the bank may result in what? Interest rate mismatch, liquidity risk, foreign exchange risk, and all of these. It is similar to the earlier question, only it's reversed. Now let me see how many of you can answer. Let's solve this tomorrow. Okay, before going I would suggest, see this, October 3rd this new batch has already started, not many days have passed. ABM, BFM and retail, so join this batch ASAP. In this batch we are covering all the numericals, objective questions, theory and case studies, everything what you need for CAIIB. Okay, so join this ASAP, and you get the recorded videos also. If you have missed some classes, you will definitely get the recorded videos. Now about this code, use this code Y432, you will get maximum discounts for after using this code. Okay, let me show you live. Go to Adda 24/7, say this, on Adda 24/7, then you go, say this, go there, click on JAIIB and CAIIB on the left side, say this, JAIIB and CAIIB. You see JAIIB, CAIIB Mahapack and November December English batch. Click on this English batch. Once you click on this English batch, see, you'll be seeing the batches. October 3rd batch. Click on this. Now you look at the details, go through the details. Okay, at your ease, all the details are given. I've already told you we'll be solving on the numericals, objective questions, case studies, everything, and also 180 plus hours of live interactive classes, mocks and ebooks are available, subject wise expertise is available, 24/7 recorded videos are available, and this batch is specifically designed for December 2022. Now why am I stressing on December 22? I'll tell you later. But first this fees, see this, 15,999, click on view offers. Get this, put this code Y432, click on apply. Now look at the fees. 15,999 reduces to 3,679, 77% off. Go for it immediately, okay? Because it's an investment for lifetime. Now let's come to why am I stressing on this December 2022 exam. See this. If you check the May 23 exam, which is coming up next year, look at the portion. See this. Paper 1, ABM, BFM. Paper 3, you have two new papers, ABFM and Banking Regulations and Business Laws. You are getting two of these new papers. Now, as of now, it's difficult for you to clear these with first two papers. Then again, you will be having 4 papers, compulsory. Okay? And what about this negative marking is also there. Negative marking means 25% of the negative marking means again it's a tougher part. Electives, see what are the electives? Rural, HR, IT, Central and Risk. Now right now in this exam, December exam, you will be selecting the elective of retail. It's very easy to clear, right? But what about this? In the year, the electives are tougher ones. Okay, so go for it immediately. Use the code Y432. Tomorrow I'll be back with new portion, new series. Okay, bye till then.